Hi, welcome to the Market Alert for Friday, the 1st of August 2025. So, just before we get into the Market Alert, this is the last one, obviously, for this week. And next week, I will be missing in action away for a short break with my family. So, no Market Alerts for next week. Right, let's get into the details of yesterday and what we can expect today. And we can see from the headlines here that speculative surge lifts stocks in July. I think the clue there is speculative. Stronger macro in July, speculative mania, and lower rate cut expectations. Well, there isn't lower expectations or lower rate cut expectations, because that was put to bed by Powell on Wednesday evening with his more hawkish approach than dovish. So we'll just have to wait and see. But it will come. There's no doubts about that, whether he's forced to or not. US stocks retreated ahead of Trump's tariff deadline. Of course, that's on the cards for today as well. Tariff rates in trade deals and letters are set to take effect from just after midnight. European time then. No, it's Eastern Standard Time on Friday, while those without deal or letter will face the 2nd of April tariff rates, which is tomorrow. That'll be interesting. Stocks fade. Tech earnings upside ahead of trade deadlines. So it's all about the trade tariffs taking effect from, we're taking effect by now. And also today, of course, we've got the non-farm payroll numbers as well. That's what the market will be looking at to see if they can use this as an excuse to boost the market as well. I'm going to look at these other... right, so Trump here, this has already come into effect here. Trump raising tariff on Canada from 25 to 35% effective August the 1st. Wow, that's going to cause problems, isn't it? That's a big increase. Canada's Carney upset by US tariff action. Well, not surprised. And anything else on there? No. So it's sort of the last minute. It seems like he's changing some of the percentages as well. So could be an interesting day, to say the least. So let's have a look at the markets for yesterday and what it's doing overnight, and kick off with the Dow. So in the Dow, yesterday, the market doesn't like the idea of the tariffs coming into effect, the interest rates remaining fixed, and also the non-farm payrolls looming as well. So the market trading down to the 78% retracement in the daily chart, where it's found a bit of support. A lot of volume there yesterday. We are heading into oversold territory as well. 30-minute chart in the pre-market being the European trading session there. The market was sideways, and then it moved sharply lower there. Overnight prices are sitting around the low of yesterday at the moment. So again, it's an unknown today, not been here before, with tariffs taking effect, and also non-farm payrolls on the same day as well. So we'll just have to wait and see. Let's have a look at the DAX. And in Germany, the market's still stuck in this sideways range, which you can see there, actually dropping out of this yesterday and trying to get back above the 50 EMA at the moment. And of course, their tariff takes effect as well. I think it was, wasn't it 15% across the board? There's so many different ones flying around. But again, it's all going to be impactful. There's no doubts about that as we go forward. You've got this sort of, with the dollar at the moment, it's loving every word of Trump, but that's going to change. That's going to change as people then start to run back into the metals, particularly gold, when they start to see the, like I say, the impact and the inflationary aspect of this. 30-minute chart yesterday. Well, we started off okay, and then we just headed south, and that's where it's been. And overnight, that's obviously when these tariffs are taking effect. The market's sideways, so it's looked like it's going to be one of those weakish days today, to say the least. So look at the S&P. So an all-time high in the S&P yesterday. This was overnight from the FOMC meeting minutes when the futures took off. Is this the last all-time high for a moment or two in the S&P? It wouldn't surprise me, to be honest with you, because like I say, there's carnage likely to be around the corner, given that Canada has been given a 35% tariff. It's really going to start an impact on the global economy, isn't it? There's no doubts about that. When you've got to factor this into prices, it can only be inflationary. Someone's got to pick up the tab. No such thing as a free lunch if you're increasing costs. The S&P seems to think the same as well with this. So if it takes out today's low, then we can expect lower prices. Rachel from accounts will be thrilled that the FT100 also posted a new all-time high on the futures market on Wednesday night. Thursday market trading all the way back down, sideways there at the moment. I just find it absolutely staggering that the FT100 is at all-time highs. I really do. I cannot for the love of money or God understand, with the pillock and tool that we have as a Prime Minister in this country, see why the markets are at these levels. It can't be anything other than a rigged game. Right, let's have a look at the US dollar. And in the US dollar, well, it's vertical, isn't it? Up to 100 once more for the US dollar. That's an interesting level. Will it hold? Who knows? I suspect not, personally, because as soon as the markets start to go pear-shaped with the tariffs, then Powell will be forced to try and support the markets. This happened in January of 18, when he wouldn't cut rates. Then the markets imploded for a few days, and then he soon decided to cut rates. And given the bubble that we're in at the moment, it's going to take something like that, I suspect, to actually get Powell to actually pull the trigger on cutting rates. Quick look at the metals, which are not looking too healthy or well. Let's have a quick look there. So in silver, no surprise really, as I mentioned yesterday, that they will try and move these prices to the downside given any opportunity they have. They're now oversold. We're down at 89% retracement. You've got that demand as well. So maybe, just maybe, it won't be a smackdown Friday. 30-minute chart goes back to the LBMA again, how they moved the market lower yesterday, and you can see that. And then the day before, they'd used the FOMC meeting minutes and the fact that Powell was more hawkish to also slam the price. So in the daily chart, no surprise, market's down. In gold, sideways to lower as well. And the 30-minute chart, you can see there, but doing a lot better than silver, which has got a steeper decline. And if we have a look at the gold-silver ratio, we can see why, because this is moving back up. As I mentioned yesterday, 90 was the target. We're at 89 and 96 at the moment, where again we're seeing this situation where there's a bit of a dead cat bounce in the gold-silver ratio, which needs to switch and start to move back. And its time will come, there's no doubts about that. It's a lot stronger than it used to be. Given a couple of years ago, if you had a situation like this where the dollar was rising and there was the opportunity to slam the prices, they could be slammed a couple of dollars. So at least now we're only seeing a dollar sort of a drop in price and not massive crushing of the price. Let's have a look at the trades for yesterday. So yesterday the German DAX started off quite volatile in the pre-market session there, and most importantly obviously getting above the previous day's high, which is always a good thing if you can do it. And then we started off okay with a buy. The market opened, it sprang to the upside, which we see there. Then it came down to the 200 MA, found some buyers. The market started to move up, and then that's where the move ended. Once we got to the R1, the prices then got into a sideways move, and that's how it remained. We got a spike down to the this was news, but I couldn't find out what it was. It was quite erratic at this area. Market attempted to move down twice and then got stuck in a sideways trading range, and then it became really messy with 4 consecutive small losses as the market moved around and kept switching from side to side, either digesting what had happened the night before with the FOMC meeting minutes or whatever, I don't know. But then once the market got going on the downside, as we saw in the bigger time frames. Market continued to the downside there, all the way down to the DP, before prices then started to come back. So there was a 100-point move there to help recoup. And then we got into the afternoon with the Dow and prices moving down to the low, finding a bit of support. And then from there we see prices also continue lower, as did the US markets. And again, a re-entry situation there before we see the market find support and then trade in a sideways move as we go through the evening there. A quick look at where we are, and you can see there the market's currently below the low, which is not a good thing. May get a bit of a bounce with the futures at 7 a.m, but I think from 8 a.m. from the cash market point of view, the trade tariffs coming in, I think it's looking very much south today for prices. Right, that's it from me for this week and for today. I'll see you a week on Monday, so I'll be obviously keeping in touch with what's going on in the markets as I normally do when I'm away. So it's going to be, like I say, an interesting one to look at as these tariffs start to take effect. So I think it's just a matter of time before we start to see this being used as a tool to get downside momentum in the markets to force Powell's hand, like that happened in 2018. Right, have a good day, and as ever, thanks for watching. See you in the next one.